Hello. Thank you for tuning into this week's Stock Talk episode. And we're going to start off the show talking about Roundhill ETFs, including DRAM and some other new additions, old and new additions to the investments that they have been creating lately. So when it comes to ticker symbol DRAM, it is the fastest growing ETF ever, even surpassing ETFs that track Bitcoin. Let's take a look. Remove this, and I'm going to bring this up. Okay, so DRAM. Let's go into it for a little bit. It is the Roundhill Memory ETF, and it was launched. Its inception date is just April 2nd of 2026. And when it comes to this one, it focuses on memory and semiconductors. And so it gives you exposure to the memory side with AI infrastructure. AI is so much more prevalent in everything that we use nowadays, and memory is becoming even more important. So this is a grouping of those companies that are going to be the strongest players when it comes to this. So this is a brand new fund, just April, not too much history for us to reflect back on. And so I've seen some people reaching out to me, asking my opinion, feeling frustrated because they are currently down on their investment. And that's going to happen. This fund just came out, as I said, just so recently. And let's go over to take a look at, do I have it here? Nope, that's not it. We can close this one. Okay, here we are. Nope, that's not it either. DRAM. Okay, let's see. Okay, in that short amount of time that it's been around, the price has had a high of $81.34 and a low of $26.14. I only have a few shares in my portfolio, and I picked them up when it got below $49 just recently. And so I can understand people's frustration, but you have to realize it's been such a short amount of time. This is when I want to encourage you guys to make sure that you have a clear distinction when it comes to choosing investments for your portfolio. Is this an investment or is this a trade? Will I want to continue dollar cost averaging, buying additional shares? This has a pretty low share price. However you're going about building up your portfolio, is this one that you would want to add when the price dips? Do you believe in it long term? Do you, just like all of the hype and all of the people that were going about investing into this ETF when it initially hit the market, do you have a long-term conviction in what they've created here around this memory ETF? So these are things to talk about. So my take is this is something that, as I said, I have a very small position. I only have 5 shares, which I will show you what my position is looking like so far. But the thing is that you have to, I would pair this as a much smaller allocation to my portfolio than my S&P 500 investment or even SPMO, my momentum ETF, because it's so new. It's going to have a higher level of volatility. So you have to know what's the right fit for you. These type of funds, these type of sector specific, very niche funds, they come with a higher expense ratio, and that's because Roundhill is putting together things that they anticipate to have that higher performance. But you have to be ready for the volatility. You have to know if it's the right fit for you, and it's only been out a few months. Something can be the right fit for your portfolio, but not this early on. I was doing a live a few days ago, and I used the example of Amazon. It would be a totally different experience investing into Amazon in the late 90s, say from 97 into 2002. If that was your starting point, you would have gone through so much pain over those years, waiting till it became even profitable. Never mind deeper and deeper into profit. It was kind of pulling back and not even having profits to report back then. But it would be a totally different time frame and experience if you incorporated Amazon into your portfolio, say between 2001 and current. So just an example that I wanted to share. As I said, I'm going to show you my position when it comes to DRAM right now, but it's something that's going to need time. It is anticipated. Like I said, I picked it up a little below the $49 mark. And someone had reached out to me and they're currently down on their position. I don't know exactly what their average price is, but like I just touched on, it has hit a high of $81.34. And it is anticipated by looking at analyst forecasts that this is anticipated to go back to into the 70s and $80 range. It's just a matter of time and being patient if this is something that you have that conviction into and have invested into already. Okay, so let me pull this down for a second. We're going to take a look at some more Roundhill ETFs. Thank you guys for tuning in. Thank you to Joe for sending those jewels and for being a channel member, as well as Vincent Pascal for sharing his membership milestone. Happy Sunday to you also. Thank you to Daryl and David and everyone that's been tuning in. Daryl, I did watch your video this afternoon, but I didn't comment yet. Okay, so now let's go back and take a look at some more of these Roundhill ETFs and drop your questions as we go. So let me know what you think about these funds. Okay. Oh, I said I was going to share my position before we went on to something else. Here it is. All right. So here are my 5 shares of DRAM, average price $48.12. So I'm just up slightly when it comes to this one. But I do have some limit orders in. I did plan on building on it a bit more, but my limit orders have not filled, and I have not made a plan of, I have not put in a plan yet of, a daily or weekly investment in order to build up this position. But it will remain a smaller position when it comes to my overall portfolio. All right, so now Roundhill had 2 more ETFs that came out just this month. And we're going to take a look at those. I added light at the last second, right before I started the live stream, because I had forgotten about it. But first, let's look at ticker symbol NCLD. So this is the Roundhill NeoCloud ETF. Okay, so we have 20 holdings here. And this one launched on August 6th. We're going to take a look at all of the expense ratios together, but these are managed funds. They're actively managed funds, so they come with that higher expense ratio. This one focuses on companies providing AI computing infrastructure. So right now, this is one that's kind of moving beyond just those chips that are needed. It's going into the computing power that's needed to run AI. And so it targets the infrastructure layer. This is extremely new. So there is even less of a, with the fund as a whole, there's even less of any time for us to look back on. So with these ETFs, you also need to then take a look at the top holdings if they're companies that are easy for you to research, and then draw from that, because like I said, you got to make your own decision and realize this is not the volatility such a very specific niche amounts of companies the sector that you're going to be holding, you have no broad diversification to give you some stability and kind of help you to ride the wave. And also, as we've seen so far, there is a very low amount of companies here. That's another factor. It's not even a few hundred, never mind thousands that you can get in some of these funds. So this is a look at ticker symbol NCLD that just came out from Roundhill. And if we take a look at how this price, well, we can see it on this page too. Let me see if this matches my notes. Yeah. So, so far since it's been out, which is just this month, it's had a high of about $21.80. No, it's had a low of $21.80 and a high of $28.10. So about $22 up to $28. And so another one that needs time for it to play out. And the top 10 holdings here, I don't think they're going to be any, let's see, we see Nibius, CoreWeave, Iron, Hunt 8, Applied Digital. So this is what I mean when I say that when you're going to choose the path of going with an ETF that is so new, take a look at the heaviest weightings and do a little research on those in order to help you to make your decision on whether you want to go the route of investing into the ETF. If you want to choose some of those top holdings and invest into them directly in order to lessen the amount that you have to pay for an expense ratio, there's different ways to go about making your plan when it comes to investing. So like with me, I've decided to invest into SMH as a way of getting exposure to semiconductors. But that was after I had a few individual stocks and then decided I want to rely on an ETF because I didn't want to have to continue building up positions into so many different funds. So this is the NeoCloud ETF. And we'll take a look at a few more Roundhill ETFs is what we're kicking off the show with today. And this next one, well, no, let's go down to Light. This is the other one that I told you that is extremely new, just came out on August 6th. And this fund is Photonics and Optics ETF. So it's going to be the same kind of situation, just like the one that we took a look at, ticker symbol LCLD. This one has had a low of $24 and a high of $27 so far. And let's take a look at how they describe this. Exposure to compute and connectivity layers powering the AI infrastructure build out. So some of these top holdings here are Lumitum, Coherent. Those are two newer additions to the S&P 500. And other names probably we're not going to be as familiar with if I do even take the time to mention them. But let's go back to the previous page. So those are three of the newest Roundhill ETFs that I am aware of that give you, especially DRAM. That's one that everyone's been talking about, but it's had a pullback. It's really moved a lot since its inception, which is just April. So guys, make sure that you're incorporating things that you're comfortable with. And yeah, it takes time. It takes time sometimes for your investment to, get its footing. Certain sectors could be impacted by so many outside sources. So we have to be ready for that and make that decision on what is the right stage to get started investing. So now let's take a look at some of those more established funds from Roundhill, and we'll go to chat. So this is the Roundhill Generative AI Tech ETF. Oops, let me take this down for a second. I'm getting bombarded with these ads. Okay, just trying to get them closed out. All right, let's go back. And Keenan Grace, thank you for tuning in. You wonder what the RSI looks like on DRAM? I will pull that up in just a second. All right, so this is a bit more established fund when it comes to Roundhill. This one dates back to 2023, just a few years, 49 different holdings. And this gives broader exposure to generative AI and technology. So names in here, we're going to see NVIDIA, SK Hynix, Google, AMD. But let me pull this down for a second and see if I can share my Weeble charts. Let's pull this over. All right, let's see if I can get this shareable. Nope, not there. Okay, so I pulled the chart on DRAM. This is my Weeble chart that I use when I'm working on planning out my trades, and the RSI. The RSI is at about 55. So 49.35. And what's the current price? So the RSI is kind of in the middle right now of the 70 and 30 range. So guys, with this one, I definitely wouldn't rush to I think we can still have a time period where you can get lower prices if you're able to. And this is one that you do have that conviction into and want to build in. I would stick to, setting your alerts and setting your limit orders and still trying to wait for a pullback. If you don't want to go that direction, like I said, the price targets for it are anticipated in time to go back up to into the 70s, potentially $80. So we have to be ready for that. I usually do a mix when it comes to all of my investing, as far as dollar cost averaging, buying at the current price if it's something that I plan on building into and holding long term, and mixing that in with limit orders to buy those full shares at those most ideal prices. They may not come around, but I usually mix those in order to have them ready just in case that they do. Okay, so now let's go back to what we were looking at here. Okay, so we touched on what chat is a little bit. One of the more established ETFs from Roundhill. And MAGS is another one that you may have heard of, and this is the Roundhill Magnificent 7 ETF. So it's going to be weighted into what the Mag 7 is. The those we know Microsoft, Alphabet, which is Google, Amazon, Nvidia, Meta, Tesla, of course, Apple, and yeah, I do not see they Roundhill. I think maybe they've over the years gotten to the hang of things, of creating things that are more uh, creating a niche, or creating a ETF that really have top performing companies in a way that is worth the expense ratio. But I don't think not so much when it comes to this one. And this one also dates back to 2023. So if you already own something like VOO, I wouldn't bother with using this fund. I definitely have overlap when it comes to my ETFs, but something with more growth and lower costs than to go with a fund like this. And the last one I'm going to touch on before we look at the expense ratios and performance on all of these Roundhill ETFs is this metaverse ETF. And this one also dates back to 2021. And this came out probably when all that metaverse talk was very popular, and they thought that they were putting together some compelling investments around all that hype that was going on around this. But there was excitement around the potential of the opportunity, but investors have not seen them be able to put this into a place where we can see that it's actually turning into a theme with earnings and shareholder returns that will be beneficial long term. So, but even though these are some of the older funds when it comes to Roundhill, people are definitely excited and giving them a chance when it comes to uh, getting on board with what they're creating now around this photonic and optics, as well as the memory ETF here. Thank you for tuning in, Sledge. Thank you for those jewels. Okay, so on the screen here, you should be able to see the expense ratios of all of the funds that we've been taking a look at so far. And they're between, the lowest is that MAGS funds at 0.30, and then the others are 0.59, most are 0.65, and then we have the chat ETF at 0.75. So pretty high when it comes to those expenses that you will pay for holding on to these funds. But usually, we're going to take a look at the performance, but usually I make sure, usually when a fund commands a higher expense ratio, I'm assuming that the performance is going to, outweigh and be a benefit to you long term. So you're usually able to and willing to pay that. Okay. Um, let's take a look at, so those are the expense ratios. I'm going to put VOO in the mix here, which I'm just doing that just so that we can see how these funds have been performing against a basic S&P 500 investment. So I'm just throwing that on just for that reason. And we're going to look at this on the shorter time frame. Let's start at 6 months, because a few of these funds have just come out. Some came out this month, some one just in April. So taking a look at the performance on the 6-month time frame, DRAM up 106.56%. So definitely in a place right now at $57, where it has pulled back from its high of 80 in that short time period. But we need to give it time to see how this one plays out. And we have to be ready always to have the volatility when it comes to holding such a specific ETF with a small amount of holdings within it. Okay, so chat is up about 48%. Ticker symbol NCLD is up about 20%. That metaverse ETF is up about 16%. And then we come to VOO, which I just threw in there just to give us a little benchmark so you can see how they compare to the S&P, which is up 14% over the last 6 months. And then coming in on the bottom end here is the MAGS ETF and the LYTE, LYTE ETF, one of the ones that just came out this month. So I'll just go to one more slightly higher time frame. I'll go to 1 year. And so, as I've said, some of these have nowhere near as a year to reflect back on, but DRAM is still the leader when it comes to this grouping at 105%, but significantly down from the amount that it debuted at back in April and grew to over these last couple of months. So I'm going to take a minute to take a look at the chat, but that was a look at some of these Roundhill ETFs. So let me know which ones have you added to your portfolio, and how concentrated of a fund do you like to have in your portfolio? Do you think that these are good fits for you? What do you think? Do you think that these expense ratios, I know some of these older funds are more focused on like LYTE, NCLD, and DRAM. Do you think that these expense ratios and the future of the companies that they hold are worth it? And are you building in at this point, or are you kind of giving it time, only building in at those very low price points, or are you giving it time to play out? Maybe just like we're often encouraged to do with IPOs, give it 6 months, give it a year. You don't necessarily have to jump in when it's so brand new. Okay. All right, so I'm gonna scroll back a bit on the chat to take a look at everything that everyone's been sharing. And see if there's any questions or comments related to the Roundhill. Okay, memory chip prices are through the roof, yes, and it's going to impact our phones and our gaming systems and things like that. So yeah, they're definitely passing the cost on to us. Laptop costs as much as a car for a nice one. Well, these prices even for used cars are so high. Jamal, I dropped 2 tickers there. Those tickers that you want to take a look at today. IGV and VGT. Okay. Hello, Lisa. All right, so I don't know if you have any questions or thoughts on Roundhill before we go on to the next topic for a little bit. My DRAM cost is $63.94. Yeah. Oh, yeah, you're not the only one. You are not alone in having a higher average when it comes to DRAM. But one thing that kind of slowed me down on investing into it is I originally was going to add some shares in my portfolio over at was going to do it at Fidelity, and they're charging a fee because they are charging a fee for all the Roundhill ETFs. And so I kind of took some time to think about, which portfolio I was going to decide to add it into, where I had the budget, and I wound up putting it into my Moomoo portfolio. But At the time when I actually made the video about the fees related to investing into it at Fidelity, I think it was $70. Daryl is sharing, I'm selling a few rentals so that I can invest in the stock market more. Okay, okay. What are some of the companies? I'm not sure what funds you were at, what fund we were looking at. I did talk, oh, well, from Lots of Luck, you see, I did see yours. So I touched on a few there, but we can go back to that screen before we move on to um, the next topic. Anyone bought any SpaceX? I do not hold any shares of SpaceX. Afternoon. Okay, Gary, I see your question about QQQM and QQQI. Yes, those are different. And I will see if we could take a look at that. QQQ and QQQM are the same, but those two are definitely different. Okay. All right, I'm just taking a look back through the chat. All ETF index and mutual funds, mainly 90%. That's how you have your portfolio set up, Eddie? My individual stock is Walmart because I shop there. Yeah, I definitely have more than one individual stock when it comes to my portfolio. I do have some of all of the Mag 7 and a few others. I want to start Walmart and Amazon portfolio very soon. Yes, I believe Walmart, if you take a look at my at the earnings calendar, I mean, I know you're a long investor, you're just holding on, but Walmart and Target, Home Depot and Lowe's are a few companies having earnings this week. So your portfolio might see the impact. Okay. Okay. I don't know what RSI is until now. Let's see. I've been throwing some extra cash into my brokerage account, waiting for next month. Usually the month of September is down month, and then I will start rebuying. I will start buying. Yes, that is very true. Agreed. September is historically a month when the stock market is low. Again, thank you for sending those jewels, sharing your member milestones. Okay, so there's a note here. It says, thank you for breaking down Roundhill. I'm going to do more looking into each individual one and see if they're for me. I'm currently investing into DRAM, Light, and VLL. Okay, so with something that what I'm saying with me when it comes to my portfolio, my VLL would be substantially larger than what I would be holding long term into a fund, these other funds. But I'm not opposed to it. But I see the pain that people are feeling when they've been early investors into certain IPOs like SpaceX, as well as things like this with talking about ETFs. And so there've been so much frustration around it. Okay, so I missed a question from Keenan Grace at 3:30. But guys, let me know if you are interested in me going back to the Weeble chart and looking at the orb strategy, ORB. That's the open range breakout. And we can do that on a particular company. That's a feature that I usually incorporate when it comes to getting ready for my options trades. I have an ETF I would like to talk to you about. Please tell me what you think. Okay. So because he let his shares of DRAM go, he might check it out later. Wow, a fee? Yes, all ETFs and mutual funds, almost all, are going to come with a fee. Some are very, very low and insignificant, but some are pretty substantial. So you have to be ready for that. And yeah, David, Stock Talk David often makes a joke about me that I'm a stickler about those expense ratios. So, okay. Okay, so I see I bought, I think, let me just jot down this ticker symbol, see if we can go back to that. Okay, so yes, please, yes, please. Is this when I was talking about the orb? I see a couple of yes, pleases as I come down here. Okay, well, we can take a second and do that. All right, so yes, yes. Okay, so I'm going to take a break from that before I go back to my topics of the day. And like I said, this is mostly related to, I have to remove this. Is EVU a ticker symbol that you want to take a look at? I'm going to have to save that for after I get through a couple more of my other topics, but I'm going to stop the screen sharing. I'm going to go back to, oh no, that's not how you do it. Cancel. Okay, so present. Okay. So guys, make sure that you leave comments on my regular videos, even my posts on my community wall. If there's something that, crosses your minds and, maybe it will make it into the show. Maybe you'll be the question of the week on my community page. Just texting my daughter, sorry. So she's still not driving, guys. She needs to be practicing and working and all that good stuff. Um, it's tough. It's tough. It's like you know how to do it, but it's hard. It's hard to teach someone else. Okay. And highway driving, that's another thing. We have parking, highway. Hmm. I'm having trouble sharing my screen. I'm seeing it come up. Oh, there we go. Okay, okay, okay. All right. So guys, I'm going to get back to talking about the S&P 500 and some other topics. The Roundhill ETFs was my first topic of the day. We have a few others, but a few people in the chat seem interested in taking a look at what my chart looks like. This is I use the Webull desktop. You can download this for yourself if there are things that you want to chart. It's free. I use a free version on this. And so my indicators I have set here, I have the VWAP here, I have my RSI, and I have my MACD. So those are my main indicators, but the one that you guys said you would be interested in taking a look at how I set up is my orb. And so I do that by taking a look at the first three 5-minute candles of the day. And obviously, the stock market is not open. It's the weekends. So I pushed my chart back to Friday. And so I'm making a line at the high and the low. Let's see, right here, of the first 3 5-minute candles of this particular day. And so that is another indicator that I can incorporate with the others in order to determine the direction of the day. Once the candles break outside of the orb, which are those 2 lines that I just incorporated, then I can make my decision on whether or not I get into calls. On this day, even though this green candle broke out of the orb, you see it started to trend down. So every indicator is not going to be perfect every single time, but when it comes to investing, when it comes to trading, when it comes to investing, like I always say, we can always use the indicators. I'm not here to gamble. Just like with reflecting on historical data of how the stock market moves when we're in war times or going through COVID, or some things that was a very special different circumstance that we had never been through before, but changes in administration, high inflation times. You have to realize, as an investor, you have to be in tune with that and look back on those time periods to help you to understand what's going on with your portfolio. Because if it's significantly down or if it's thriving, I want you to understand why. And if something is lagging, I want you to understand so that you can know, is this temporary or is this not a quality investment? Is this something that should be cut from my portfolio? But as far as setting up the orb on a day, you set your chart to the 5-minute time frame, and then you find the highest and lowest point when it comes to those first 3 candles. And then you can just wait and see if it breaks above or below. The candle body is breaking totally through on the bottom or top range. And so another thing that you can incorporate is going back to the previous day and seeing how things played out overnight. And I went to, let's see, turn my horizontal line. All right, so I'm going to make a line on the previous day, high and low, just high and low in general. Not, we're going to change the color of this to something else. Let's see. All right, so the yellow lines that I'm going to incorporate here are going to be the previous day, high and low. And the white lines are the orb of what would be the current day. But like I said, it is the weekend. So that's Friday's high and low, or Friday's orb. Okay, so let's kind of stretch this out a little bit so we can see our candle. So I'm going to make another yellow line so we can see what the previous day was looking like. Let's get this yellow. All right, so the white lines are the first 3 5-minute candles of the current day. And then the yellow lines are the high and the low of the previous day. So taking a look at this can kind of give us another indicator, because we can see the dark black areas. those are the main part of the day. And then the light gray and the two gray colors here are the overnight hours in between. So seeing that it broke above the previous day's high and low overnight is another indicator that you can use when you are planning your strategy, especially if you're going to be making a move to pick up shares. Definitely need to incorporate all of these things when you are planning to trade on a short time frame, one day or a few days. But even making your decision on when to pick up your contracts, even if it is going to be held for a longer term. I definitely like to hold on to leap contracts as opposed to shorter time frames, but I'm open to both. I do both. But you have to have the time and be ready to be on top of looking at the charts in order to make sure if it is a zero DTE a contract that dated for the current date, you definitely have to be ready to be on top of it and make those moves. So, guys, these are more of these are strategies that I incorporate more so when I'm planning for my options trades. But some of you in the chat seem to be in tune with what I'm talking about, and the ones that you're seeing on my chart right now, these are 4 different elements that you can incorporate. Like I said, I'm not about just jumping in. It's not going to be a gamble, which is a topic that we're going to talk about today, sports betting and things like that. That is not, there's no way that you can kind of twist and manipulate that to get yourself to think, or to get me to ever believe that that is a way of a practical way to go about building your wealth. So on the previous day, let's go back. So the 2 white lines that we have there, that was the orb. That should be the orb for Friday. And the yellow lines, those were the high and low of the previous day. But let's just put in just one more range here, and that's going to be the orb of that previous day. And we're going to have to use another color for that. So I think this line, I should have had it a little bit lower now that I stretched it out a bit. So guys, those of you that do trade and use the chart in this way, what is your favorite, most ideal way of going about setting up your chart? Okay. Sorry about that, guys. You know how it is. Or if you don't, I can tell you. I'm a mom and I answer for my kids. Okay, so the previous day, horizontal line. Here we go. Here we go. And horizontal line again. Okay, so I put the Orban on that previous day that I was taking a look at. So 1, 2, 3, move this up a little bit here. So these first three, nope, nope, this one, 1, 2, 3. Let's bring this down. And there's little tiny wicks on the candles. So if it doesn't seem like I'm lining it up, I'm making sure to incorporate the wick that's hanging down to get the rain on those first 3 5-minute candles. So on this day, it played out a little bit more in line with the orb and the MACD kind of matching. Whereas as we got to this point here, the body of the candle was breaking above outside of the orb. So that would be an indicator that we would go ahead and buy call options. And then a little earlier on, but not too far behind, the MACD crossed above the signal line down here. So if by the time we got to this point, I probably would feel more confident because I would have kind of two signals pointing me in that same direction of going ahead and buying calls. Then we also have all of these bars here above the VWAP that we're seeing here, which is this kind of a yellow line. So when it's above, that's a sign that it's bullish. So multiple indicators at times play together and can give you more conviction and more support in making your decision on potentially which direction your investment price is going to go. And these examples that I've been using today, we've been looking at DRAM with this charting. But yes, I've been definitely trying to put more effort into understanding, combining these things, and the more indicators that you have, the more solid of a plan that you can come up with, more money that you can put into choosing what your investment is going to be. For example, if I only had one solid indicator, then I would just be choosing a much lower cost contract. But if I had all four indicators or multiple indicators, say three at least, all pointing in the same direction, then that gives me more support behind being able to buy a higher price contract. So okay, so okay, so yes, yes, yes. Let's see. So yeah, as I was saying, the orb it played out much better on this day than it did in the first day scenario that we were looking at, because when we had it drawn here, even though it broke above, didn't really last as long as the previous day, where it was just running up for pretty much the rest of the day. So I know traders, I haven't really traded that much since the last week of July, but I know some traders that I saw chatting on Friday were really making out well on Tesla puts, because Tesla, a more complicated investment to trade, by the way. I primarily trade the SPY, not individual stocks like that, but a lot of people, when it comes to individual stocks, Tesla is one of their go-tos. But QQQ and the SPY are better and high liquidity, better choices overall for traders that trade on a regular basis. Those are usually their go-tos. All right. So thanks, KG, for that super chat. Much appreciated. Okay. So guys, make sure, I haven't been saying it over and over, but if you haven't already, make sure to like, subscribe, hit that notification bell. If you've been enjoying this discussion, make sure you are subscribed to the channel. And I'm gonna go back to some of my topics of the day, but I hope you enjoyed taking a break and doing a quick look at looking at my, desktop, some of my charting, some of my go-tos for going about choosing my trades. If there is anything else anyone wants to ask on this before I take it down, let me know. I wish I had money to reserve to buy contracts. I will get better with my finances. Great explanations. Thank you, thank you, thank you. So I just took a station break, but don't forget, give this live a thumbs up. If there's a mod that can check and see how the likes are coming along, I would appreciate an update. If you're taking a second right now to give the live a thumbs up, tell me what number like you are. Yes, yes, yes. And if you are watching me on the vertical, I am also streaming. So you might want to switch over to the other side if you want a better viewing experience. Okay, okay. I see 17 likes. Okay, thank you, Anthony, for the update. You were number 14. Okay, so I see a comment here of, is it possible to buy a $40 contract? Yes, you can buy $40 options contracts. The answer to that question is yes. Now, when I talk about wanting those high quality leap contracts or close to leap contracts, for example, something that dates out to January of 2027 or a full year, which is a true leap from the current date that we're at now of, into next August of 2027. Those are leap contracts when it comes to options trading. So with that, you're going to get more time for your investment, your contracts, your trade to play out, to go in the direction, for example, DRAM going back up to $75. You have more time. There's lots of different elements to it. This is something that I will never teach as far as, theta and time decay and all the different parts when it comes to options trading. But there are contracts that are significant costs in the thousands, but there are definitely low cost options of single digits or double digits, like $40, like KG was sharing as an example of a lower price contract price. And you can incorporate. I've never been one to paper trade. So for me to buy a $40 contract using the elements that we're taking a look here at, using the indicators that we've been taking a look at, instead of being a paper trader, I most likely and have in my own personal experience taken real trades, and if I wanted to scale them down to those lower costs while I was still in that learning and practice mode when it comes to getting started with my investing. But that there are lower cost contracts that you can incorporate. And you can also, just like with investing, don't think that you can't find the right fit for yourself. Now, you have to be more mindful with those. You're not going to get the highest quality contracts at those low prices, but you can do it. You can learn. You can build up your portfolio and then scale up once you know how to read the charts better, when you know how to put on your stop loss, which is an element, a feature that you can use, that you should always use if you are options trading, in order to make sure that you're limiting any loss, because a trade can take a turn and go in an unexpected direction. Just because it's an options contract does not mean that you have to lose all of your money. You have to lose the entire amount of the contract. I had a boss that every time I mentioned options trading, he would be like, "You can't do that, Lisa. It's dangerous. You'll lose all your money." And I'm like, "You know me. You know me. You are not a stranger to me. Would I do anything that would put me in a position where I would lose all my money? Absolutely not. Never that." And so you're gonna get into your options contract. As soon as I get into my options contract, the next step is putting on my stop loss, because I have to get my risk limited, my potential loss limited. And so it depends on the contract size and how, the charts are playing out, but I'm gonna have an initial amount set that I'm gonna set for myself. Now, I can't tell you exactly what amount. It could start off at maybe a 20% loss potential, but as soon as the trade starts to go in my favor, I'm going to be changing that, trailing it up, in order to make sure I'm capturing those gains when it comes to my trade. Now, I don't trade. I don't share my option trades. From time to time, I do every once in a while. On my community wall, maybe once for the week. But I just give that as an example of things that I'm doing. It is part of my investing journey. I am primarily I'm much more of an investor than a trader, but I consider myself like 95% investor and 5% trader. But even with that small amount of being, even with being primarily investor, if I'm going to trade, I'm going to trade to my best of my abilities, and I'm going to do it in the right way. No gamble. Okay, so Anthony, thank you for that generous super chat. I think that's two of my goals that I had set for today. So thank you so much. I really appreciate that. I know you like the song, so I might have to make time to hit that song. Will you play the cutaway scene? Oh, you're mentioning it. Yes, I will. For you and D Hope, thank you for that $5 super chat, and the Jules also. So I will play it once for you, KG, and everyone who has been sending Jules today. Thank you so much. Let me, and then we will get back to the show.
Thank you so much. We do greatly appreciate it.
All right, so I'm going to take down the chart unless we had any other comments related to it. Okay, definitely agree. I hope you brought your oven mitts because it's about to get hot in the kitchen, my guy. Okay, you guys were having fun in the chat. You don't paper trade. Such a risk taker. Well, I always am truthful about my investing and trading journey. I just never got the hang of it. I don't really even know on the Webull platform what the paper trading is all about. I really did always trade from the start with real money, but I learned how to use my stop loss, and I'm not running into any situation where I'm going to be taking any huge losses. Okay, so I'm going to remove this, and we're going to get on to one more topic that I had for today. Maybe I don't need that. All right, we're going to talk a little bit about the S&P 500. This is much more broad, low cost, diversified way of investing, unlike those Roundhill ETFs that we were talking about at the start of the show. And I did a video last week talking about the S&P 500 price targets being raised. And basically, really what I was highlighting in this video is that AI is paying off, and I'm seeing it in my portfolio when it comes to my investments into some of those Mag 7 names that you see here, like Microsoft, Amazon, and Google. So JP Morgan has raised the price target for the S&P for the end of this year up to $8,000 from $7,800. And shortly after seeing that, it was already hitting all-time highs a few times very recently. And so right now, the S&P closed at $7,785. So I think most everyone here would agree that things are looking strong, and we seem to be on track to hit that 8,000 soon. And this will be lovely for my portfolio. So this is the actual indice of the S&P 500. Indice index, however you refer to it. But we don't get exposure. We don't invest directly into it. I invest into it by incorporating VOO, which is an ETF, as well as FXAIX, which is a mutual fund, into my portfolio. And that's how I get exposure to the top 500 companies. Actually, there's about 507 companies in the S&P, because I think that's from investments like Google that have different classes and things like that. But this is going to be, from where we are currently, that's a potential of about 2.5% upside from where we are now. And so we're seeing the earnings growth. We're seeing all the AI investments, the corporate spending that these big names have been doing in the billions of dollars finally start to trickle down to the results that we're seeing when it comes to their earnings. And then the investors' confidence is being boosted. And so the market is being focused on what the actual revenue and, the cash flow and all those things are going to be for the big names that lead the S&P 500. So I think I'm not sure if I listed out a few. Let's see. I didn't list them. I don't think I got around to listing them, but in addition to the two that I mentioned, like VOO and FXAIX. Some other ways that you can get exposure to the S&P, we have IVV, SPLG. There are many ways of going about it. And, you know, it's something, it's very specific. So there's absolutely no reason to go with a higher cost alternative if you are just a regular long-term retail investor, as they call us. I would never go to SPY to invest into, because that one has an expense ratio of 0.09%. So that's my go-to for trading. QQQ is my go-to for trading, but there are investments like VOO, IVV, SPLG, index funds like FXAIX and SWPPX, just to name a few. Guys, let me know if there's any that you need me to write out for you, or have any interest in hearing anything additional about. But it's just the basic S&P 500. This is one of my foundational investments to my portfolio. And right now, whichever one you're going with, it'll be weighted in a very, very similar way. It should be, pretty much identical, where you're getting the heaviest weighting into NVIDIA, Apple, Microsoft. We have Amazon, Google, Broadcom, Micron, Meta, and Tesla in that top 10. Now, let's take a look at some other recent news. So I think as of tomorrow, well, let me share my investment portfolio when it comes to my S&P 500 investments before we go on to that. So this is my FXAIX, my largest FXAIX position. I'm up 70.67%. And I was driving in the car today and I was thinking about what that 2.5%, potentially by the end of the year is going to do to boost this position, which I plan on holding on to every share that I have. And thinking of the day when this position alone is at $100,000 gain. So that will be a video I will definitely make and share with you guys when that day comes, because I'm going to keep on holding. I am a buy and hold investor. So that's what I'm looking forward to. So I have about 700 and I think 54 shares when it comes to this one. And I built this position from some funds that I had from a target date funds from a previous job, my first job that I ever had. And when I took a handle of that portfolio and I transferred it over to Fidelity, I got started investing into FXAIX, and I built this up and I've been holding. And I haven't been holding for a long time now to get to this 70% gain. Thankfully, I got in at a point where I was able to capture those back-to-back years when the S&P 500 had returns of about 25% year back to back. We did have a lull when it comes to 2022, but then we did have a pretty few strong years there. And then another S&P 500 investment I have is VOO. And so why do I have two? Because I have shares in my retirement account and I have shares in my taxable brokerage account. So this is a look at my position when it comes to my taxable brokerage account. So I'm up 63%. So I'm sharing this also because I want people to know that you don't have to always choose individual stocks in order to be on track to build wealth. Like I said, I feel like this is a beginner-friendly investment choice that anyone can get started with while they're trying to figure whatever out. You can be building into this while you're trying to research the DRAM and the light ETF and decide on where that is a fit for your portfolio. But overall, I think this is a fit for everyone's portfolio. So now let me just pull this down for a second so I can see what's coming up next. Okay, so that was, I was going to touch on, Well, I don't seem to have a slide for it, but I'll just pull it up over here. So guys, I did jot down some of the ETFs that you were mentioning. I think I'm going to shift to that in a second, but I will anyone to drop it again so that I'm looking at ETFs of people that are actually still here in the chat. Okay. So I wanted to take a look at Reddit, and Reddit ended the week up 12.63%. And what's going on with them? They um, Reddit went public back on back in 2024, I believe, which was not so long ago for a company that is already going to be incorporated into the S&P 500. And that's going to be effective coming up this week. And so within 2 years of a company going public, being incorporated into the S&P is fast in general. And that's to do with the rules that the S&P has on making sure that you meet a certain criteria before you get incorporated. So you have to have hit certain eligibility requirements, including the market cap, liquidity, profitability, and trading history. And so Reddit has done it, and they're going to be incorporated coming this week. And this is what you usually see when a company gets incorporated into the S&P. They have one of the initial boosts to the share prices that is tied to that announcement. So let's see how long it takes SpaceX to make this move. So Reddit is going to be taking over the spot of Avalon Bay, which is a company that I never heard of. But anyways, they're getting the boot. They're out of the S&P. But I guess it depends on how you look at it, because I guess they are merging with another company, and so that's allowing their slot to be open. And then Reddit was the one next in line in order to get incorporated into the S&P. So, okay. All right. Let's see. I guess I'll just run through. Let me see if anybody has reshared any tickers. Like I said, if you dropped a ticker earlier and I did not pull it up and you are still here, you can drop it now. I'll make a note of the time, 4:20, and I will pull it up if you're still here. If not, you can try to come back next week and okay, SPMO. All right. I will definitely do that for you, Sean. But let's just touch on my last topics and then I'll do that, and then we'll probably be wrapping up. And okay, so this is a topic that I wanted to touch on. Gen Z redirecting money away from investing and towards sports betting. And I'm assuming in this number, it's also these prediction markets. And so I just want to touch on this because young people need to realize the difference. Like we unexpectedly spent some time today looking at my Weeble desktop, my charts that I use to make plans on setting up my limit orders, to make plans for getting into an options contract. I'm here. The goal overall is for me to make my money, make more money. I do not want to lose money. If you are gambling, if you are dabbling in these prediction markets, if you're not investing into companies that have a long track record that we use every day, like Apple, or investing into an indice like the S&P that we just looked at, that's going to give you, hundreds of those top companies, most heavily weighted into those names that we took a look at that are very familiar to us, like Google and Nvidia. But by going ahead and allocating money over and over again into sports betting, don't encourage the young people around you to know the difference, that there's nothing for you to build upon with this. Investing is going to give you ownership. It's going to give you long-term growth, compounding. It just takes patience, especially if you're invested into the right thing. Now, you're going to have more turmoil when it comes to those individual stocks, but that's why you get into a low-cost ETF, and that is the foundation. That is the anchor. That is something that is always going to keep your portfolio strong. And so, know the difference. There is a clear distinction between investing and gambling. So that is one of my topics. And then the other is talking about credit. Over half of Americans carry credit card debt just to cover the basic necessities. A recent survey says that 56% of Americans said necessities such as gas, groceries, childcare, and utilities are contributing to their credit card debt. So, credit card debt is something that you have to make time, you have to put in the work to get rid of. I know it is so hard facing those numbers, but if you are carrying any debt, I encourage you to list out the amounts and the interest rates and come up with a plan that works for you on tackling them. And I want you to make sure to put those interest rates on that list so that it stands out to you. Some of these rates on these cards, um, you know, uh, cards like a Visa are usually slightly lower than even these store cards like Macy's and Express and things like that. So you have to realize what impact you are having on your financial future by carrying this debt. And if you want to be an investor and focus on that, then you have to get rid of that credit card debt, because you will never be able, your portfolio cannot thrive. It cannot beat these interest rates that you're going to be losing money to on that end while you're trying to get on track with your investing journey. So you might have to take a little bit of that money that you wish that you could be deploying into the market and get rid of that debt. And also have that emergency fund set so that you don't have to sell your investments before they have time to build and grow. So, okay. So I actually touched on all of my topics of the day. I'm going to go back to stock analysis now, and I'm going to get a clean chart going, and we're going to look at the ticker symbols that people have shared. Now, SPMO is an investment that I hold in my portfolio. It's Invesco's S&P 500 Momentum ETF. I have almost 200 shares, and this is in one of my long-term portfolios over at Fidelity. You can check out a recent video if you want to see what my position is looking like so far. I just got started investing into it late 2025. But this is an investment that has been beating the S&P 500. It's been around about 11 years. And let me know what specifically that you wanted to know about SPMO. Gen Z is special. Yes, they are. IGV. So I'm putting in some of the others that were not a standout to me off the top of my head as to what. Have you looked at XLE? XLE. We're going to put a few up here and then we'll take a look at what's going on. Select sector energy. Okay, and energy is not an area that I invest into. Okay, so I think I hear you on the ETFs. Are you catching any crypto this go around, or would you watch for bottoms? I haven't been adding to my crypto portfolio, but I am holding Bitcoin, FBTC, XRP, and a couple others, but most significantly into Ethereum, XRP, most significantly into Bitcoin, Ethereum, then XRP, and FBTC. I do that one over at Fidelity. Okay, so I put a few here. I'm going to put the VOO in here also so we can just see how it performs against the S&P 500. But I went back to Sean's question. So yeah, SPMO, as I already said, it's been beating the S&P 500, but so does VGT and even the growth ETFs. They are going to be more concentrated into those names. So let's take a look at these funds. I'm not going to try to match up to everyone's name that dropped them in the chat, but I did look back to the 420 timestamp and put in what I see that people have been sharing. So we have Invesco's S&P 500. That's the one I'm holding. We have iShares Aware Value ETF. Anthony, is this one of those investments, if you're still here, that we were talking about a couple of weeks ago? Okay, so we have iShares Expanded Tech Software Select ETF, and we have State Street Energy, and I put in the S&P. So this tech software sector ETF has the highest expense ratio at 0.38%. Barely any dividend yield to speak of there. So let's take a look at the performance of all of these. SPMO has an expense ratio of 0.13%, but and it's not the highest. I would say SPMO is the highest expense ratio when it comes to my portfolio, but SPMO, I had no issue paying that expense ratio for the performance that it gives. And so let's start with a kind of a shorter time frame. I'm not sure of the inception date of all of these funds. Let's see. It looks like only EVUS is a newer fund because it doesn't have a 10-year history when we look at the chart here, but all the others do. But so maybe we'll just start off with a 10-year time frame, and then we'll know that one's not going to be able to show us anything there. All right, so on the 10-year time frame of the ETFs that you guys shared, SPMO has the strongest performance at 536%. Ticker IGV is at 370, and then VOO, the basic S&P 500, is at 320%. What ticker did you share? Please reshare it, and I will add it into the chart right now. And so we can already see on a larger time frame, 10 years, that XLE and EVUS are lagging behind even the S&P 500. So guys, you have to invest and create your portfolio based on your goals and your needs and, the direction that you want to go. I don't invest into things because they will be thriving under certain specific circumstances. For example, at the beginning, quarter one of this year, when We were just heavily into everything going on with the global conflict and the Straits of Hormuz. Is it closed? Is it open? All of that, the ups and downs that the administration was putting out there and impacting the stock market. Investments like ExxonMobil and different things, related, tied to things like that, were thriving. I don't need to have something in my portfolio just because it's thriving in certain 3 or 4 month time frames. I want something that it's going to, I can understand when it's having a pullback, but I'm more willing to hold long term as opposed to those investments that could be lagging significantly for long periods of time when it comes to my portfolio. So I say all that to say that if you have a conviction and need to have energy, want to have energy in your portfolio, or this other ticker, EVUS, let's see, what is this investment all about? Value Extended ESG Focus Fund, passively managed fund that tracks an index of U.S. value stocks with certain environmental, social, and governance criteria. Yeah, someone else mentioned this a few weeks ago. And so if you have a conviction and you want to avoid certain types of investments in your portfolio, whether it be, alcohol or marijuana or whatever it may be, things that are not going to pollute the earth. I'm not sure what draws you to this, but that is a personal choice that you are bringing into your investment strategy. But as we could see, the performance of the funds it's not in line with beating the S&P 500. And I set that as my bar. Like if I'm picking a target date fund or looking at my retirement account, for example, I'm going to set the bar of, is it in line with the S&P? Is it beating the S&P? So whether when it comes to my retirement accounts or my taxable brokerage account, that's how I go about what I'm going to hold long term. And right now, I shared earlier today my S&P 500 investments, and I also have VTI in my portfolio. But after those type of investments, I'm holding right now. I'm not building into them other than, if the drip is on and, new shares are purchased in that way, I'm not adding any cash into those investments. But everything else that I'm incorporating into my portfolios, I'm expecting higher growth than the S&P because that's the bar that I set for myself. And so I would not be incorporating energy, which may thrive on, shorter time frames and beat the S&P, but then on longer time frames, it doesn't. So let's go to year to date. Because like I was saying, the first 3 months of this year, XLE is up 33%. And XLE is energy. And so that goes back to what I was talking about with the war times and the issues that we were having can have an investment like this flourishing in time periods. And so you have to decide for yourself, would you want to hold on to this investment for years when we're very rarely under those circumstances, and just focus more on other investments that just give broader diversification and steady growth? That's how I go about deciding what I'm going to hold long term. EVU. Oh, maybe I put it in incorrectly. I'm not getting a ticker symbol. EUV. EUV. Okay, so EUV has an expense ratio of 0.35%. It's a semiconductor ETF. So I wonder if I have a semiconductor listing that I can put this in there with. Did I get rid of it? No, I have a bunch of semiconductor. So what was it? EUV. Guys, if you haven't already, make sure to like, subscribe, hit the notification bell. EUV, EUV. Thank you, Anthony. And thank you, Matt, for sharing that again. Okay, so I had this set up because I guess I wanted to talk about it today. Because we were talking about DRAM earlier. So I mean, it's memory and semiconductors. It's a very niche specific ETF. But I have up here a bunch of others that are also related to semiconductors. The one that I hold in my portfolio is SMH. So now I added that ticker shared by Matt, which is EVU, because I saw the word semiconductor in here, but it also says lithography also. Semiconductor photo, let's see, semiconductor photonic ETF, okay. So it inception date May 6th. Okay, very, very new. May 6th of 2026, new. And we've had a high of 32 and a low of 20. Now let's take a look at the performance of all of these ETFs. So different areas, but I grouped these all together because I know they all touch on semiconductors in different ways, though, as you can see with the one that Matt just shared versus SMHX, which is a fabulous semiconductor ETF. So little bit of a different twist. I might take out this one because I think this is well, I'll leave it, but I think that this one is a little bit little bit different. Three times daily exposure to, yeah. Okay, so now let's go and take a look at the performance of these ETFs. So DRAM is brand new. That other fund just came out in May that Matt shared. So we're not going to have the historical performance to take a look at. This one is also pretty new. Well, it doesn't have 5 years yet. That's SMHX. So taking a look at these on the 1 year time frame. SMH is up about 96%. And this is average. This is the average 1 year return. SOXX is up 117. We're going to have to go to the chart to see anything related to the funds that Matt shared because it's so new. So yeah, it's only up 1% right now. We saw it was only a few dollars up since its inception. So I think that there are, let me take a look back at the expense ratio. That the expense ratio of that funds is the same as SMH. So you might want to take a look at the holdings and just go with something that is a little bit older and more proven in order to see if that could be the same, a good fit for your portfolio. Because there are definitely others in this mix that have the same exact expense ratio. So think about that unless there is something specific about it that makes you want to stick with it. Let's look at the holdings here. Okay, we have Taiwan Semi, ASML, Applied Materials, Lam. Lumitum, Coherent, those two newer companies that were recently added to the S&P 500. I think you could find a more established fund, maybe even with a lower expense ratio that gives a similar exposure. Let's go over to the ones that were kind of leading the pack here. And so Taiwan Semi, AMD, ASML. Um, it's your personal preference. Like I was sharing earlier on, talking about the Roundhill ETFs. If there is something more established that really tracks in the same way, I'd probably be more inclined to go with a more established fund than something that just came out. This is just like the funds we were looking at earlier. There's not much to reflect on, and so it should move like some of the others if it has, the weighting into the companies that we were taking a look at. But, you can do something like I'm doing here, go to stock analysis, put it in against a couple of other funds, and find out, or even use ChatGPT to Google the top funds in your ETF that you're interested in, and find the even more specific than the ones I have here. Maybe you can find a fund that has similar weighting. Maybe put the top 5 and find a fund that has similar weightings into those same 5 companies, and then from there you can make your choice. But for semiconductors, i I think I would probably go with a more established fund that has, like I said, there are plenty others that have a similar expense ratio. So it's not about that being you're not saving there. But and it seemed like there were many names there, even though it has this lithography piece to it. It seemed like it had many of the companies that are in these other ETFs. Okay, so the other grouping of ETFs that we were looking at, I hope that I touched on, uh, answered or gave some insight as to what I thought about these. I think I did when I was talking about, I want I want funds that are beating the S&P 500, especially if I'm paying a higher expense ratio to be holding on to them. And I'm not about short time frames on holding on to different things in my portfolio just for them to be doing well or under very, very specific circumstances. Okay. Hey, Gavin. Thank you for tuning in. Uh, Now, Anthony, you're dropping IONQ. Anthony, if you have time, can we do our can we do our show on the topic that we were supposed to? Because I haven't mentioned it because I know you had your event and you had stuff going on. I think you had put something else earlier. IONQ. I'm not finding it. I must be typing it incorrectly. Red's room. Thank you for that super chat. I appreciate you. We can do our show. So sorry, finally getting things. I know. I haven't asked about it because I knew you've been busy. I wasn't going to ask until after your event, and things. I thought things might be settled down. Okay. All right. So it's EVU. Okay, Lisa, what is your one sector you wouldn't partake and why? Uh, I don't know if I have a sector. I don't really go to as many. I'm tech heavy. I'll just leave it at that. I am tech heavy. If not tech is very tech uh adjacent, or it's combined with tech, even though it may not be categorized as tech. So but yeah, I don't hold healthcare in my portfolio. I don't hold healthcare or energy. I rely more heavily on semiconductors. Definitely this area here. It says internet, consumer electronics, yeah, software. So there are many sectors, but I consider all of this kind of tech. That's where I lean into. Not banking, not pharmaceuticals, not energy. So I'm more so in these areas right here when it comes to my investing, and when it comes to my ETFs, most likely that's where things will be more heavily weighted. Okay. All right. So, guys, if you haven't already, make sure to like, subscribe, hit the notification bell. When you see my videos throughout the week, if you watch a video, make sure to hype, make sure to comment. I need that engagement. I need to know what you're enjoying about the videos. And if feel free to leave me comments throughout the week if there is anything that you would like to take a look at in our Sunday or other live streams when we have them. And I've been gone for the last 2 Sundays. Thank you guys for coming back and being here and chatting and engaging and sharing those tickers and keeping this conversation going for nearly 2 hours now. I appreciate y'all so much. So I'm gonna share a little bit. I did make a post on my page one day, just sharing that I was at the beach. But yes, I did. I traveled to the Caribbean. I had an event that I had to go to, and then I came back, and a couple of days later, I was able to get to Broadway and catch Tracy Ellis Ross' last day of her Broadway show. So that was last week Sunday. And Oprah had went the day before I went, but the day that I was there, Queen Latifah and Gayle King were there, and it was a great show. And I'm glad to have had the opportunity to go and see that. And I even made some other smaller things fit into my recent few days of trying to enjoy summer. I went to see Spider-Man. I watched the finally got a chance to watch the Michael Jackson movie From Home. And yeah, that's some of a little bit of a recap as to what I've been up to for the last 2 weeks and why I was not here. And but like I said, I do try to post on the community wall when I'm not in this time slot, because for years now I've been trying to stick to my 3 p.m. Eastern Standard Time live stream. I do pop up from time to time in other time slots, but I think a lot of people, and that's what I wanted. I wanted to stick to a time so you guys would always know when you can catch me live and chat with me live. That's the favorite type of content that you kind of enjoy. But that is why, and from time to time, so I'm going to have some conflicts and not be here. But I try to as much as possible. So again, thank you for tuning in. Let me see. Let's take a look. Thank you to Vincent for being a channel member and sharing that member milestone. Thank you to Thriving Glow with Joe and Sledge and everyone that was dropping jewels throughout the live stream today. And let's see, what is this? Thank you to Keenan for stopping by and encouraging me to share those charts and leaving that super chat. More Jules. Thank you. Thank you. Of course, thank you to DT Hope. Thank you to Anthony and everyone else that super chatted today. I really appreciate it. Reds, blessings to you also. And so that's it for today. Make sure to come back next Sunday. Leave comments throughout the week to let me know what you might want to see in future live streams. Let me see. Here we go. And I will see you soon.